Thank you, Charlene. I appreciate that. I guess referring to our my wedding. Got married a couple weeks back, and we were just listening to some reggae music in the theme of Jamaica. That's where I was when I got married, Jamaica, and I'm still in that mode. Apparently, you guys never heard me play any reggae music on the call before, but I love me some reggae music. All right, welcome, guys. Let's get started. We are live. And we are in a conversation about financial literacy today. But before we get started, you know the deal. Navigating territory, understanding business structure for your trucking company. And of course, this is me, Cheston Bulgin with By the Books Consulting. And all this here is how you can reach out. We are doing a thing now. We're moving into affordable advisory pricing and compliance, advisory and compliance packages, but through a monthly fee instead of paying lump sums for things. There's going to be a monthly subscription for monthly advisory. If you want to know more about that, you can reach out by any of these means. And a quick disclaimer before we get started. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. And of course, feedback is always wanted to move the conversation forward. You can always do this by reaching out to me via email or on social media at Instagram or LinkedIn at Your Accounting Superhero. Okay. And again, this is my promise to you when you're on these calls, you're going to gain at least one thing that will help you survive and thrive in trucking. You also gain a new level of clarity on what actions to take over and over again that will make the most impact in your business. When we're doing financial literacy, guys, we always want to have efficiency and effectiveness in business. I love numbers because it makes things simple. And we don't necessarily have to do any guesswork or be in the dark about things when we're pretty proficient at reading the numbers. There's a game plan that we can create, and then we can execute based on that game plan by the numbers. We're continuing the planning for profitability. Okay, so last week, we introduced financial statements. These are the main three: income statement, balance sheet, cash flow statement. And we got into income statements last week. We're going to continue the discussion of income statements today, but we're going to get more in depth into like projecting. I know if you're starting out, you really don't know how to forecast. Like, what can you expect? What things do you want to look at? How do you know what to plan for? So we're going to talk a little bit about those things so you gain some clarity. If you have any questions along the way, feel free to type in the chat or raise your hand. All right, so this is a financial statement. It's also called a profit and loss statement. It helps with loans. It helps with understanding performance in your business. Also helps with making decisions and budgeting. But when we read an income statement, what do we look at? From top to bottom, there's some terminology here. We talk about top line and then bottom line information on an income statement, which is important to understand because top line is about money that comes in. Bottom line is about what you actually keep after all is said and done. Everything, all the activity. So, gross revenue, top line indicator here, top line terminology, means that the cash or credit sales that you bring in or other income that you may take into your business. So what we do here, when in trucking, it's usually a line haul or flat rate fees for services, it's a service revenue. Okay, that's what we record in the top line of an income statement. Other income can be secondary types of income sources. For example, you may be renting out equipment. That's not your main source of income, but that is a source. You may be renting out maybe lots for parking for trucks if you have some property. That's another source of income, but it's not your main income if your main thing is doing trucking. Okay. You also may have income from what we call like billable expenses. Like you may defer some expenses to other vendors or other employees. You may charge them fees, and then you may have a markup on that. That could also be other income, okay, for the top line. And you want to understand the nature of your business and what those money sources are. For the main part, and we can actually break this down. Excuse me. We can break it down by division to get more granularity in the tracking for the business. And what I mean is, like, if you're running, flatbed versus dry van versus reefer versus heavy haul, or you're doing maybe some hazmat work, or you're just really doing maybe some dump trucks or construction, something like that. Well, you might want to have like your revenue sources divided into divisions that represent each one of those units. And if you're doing a long haul, for trucking, you may want to break that up not just by the equipment type, but you may want to break it up division-wise by the lanes that you take. So you can have like a southeastern to Midwest, or southeastern to west, or southeast to northeast, and vice versa. And you can have all these lanes that you can track and see what is it that I'm bringing in revenue-wise per lane that we take. Okay, so all this will be considered top line revenue that we bring in, and some ideas and concepts about how to track it and keep it organized so you know where your money's coming from. All right, hopefully that makes sense. Now, if we look into cost of revenue, this is the next thing. You guys don't want to keep eyes on everybody. Now, if we talk about this, is still top line discussion here, okay? Cost of revenue is basically things that impact directly to you producing the revenue. So these are direct costs. If I did not do anything, then I would not incur these costs. For example, if I did not pull a load, then I would not have this cost. So example of this would be direct driver costs, direct labor costs. These are direct costs that impact the top line, because you're only paying the driver in a lot of cases to pick up and deliver the load. Same thing with fuel. You would not incur the fuel costs if you did not pick up and deliver the load. Factoring would not be something that you would incur if you did not take a load. If you did not take a load, you would not have to pay any dispatcher fees if they're not dispatching any loads. So these are all things that impact the revenue directly, right? They're directly correlated to the revenue that you bring in. If you did not have the revenue, you would not have the cost. All right, so that's what that is. Still in the top line. And based on that, we're going to have a top line understanding of what it is, like performance-wise, like we call this a gross profit margin. Gross profit and gross profit margin, rather. That's the money that I get to keep after that's all said and done. All right, and this is before anything else is taken into consideration, okay? Now, once we do that, and once we take that into account, let's say we keep, we're profitable, we have a gross profit, we keep some money, then we got to consider all these things. These are our expenses, okay? And these are some common things that you're going to face in the trucking industry, especially if you're doing like over the road work, long haul, regional work. These are some typical costs that you would incur that you really want to understand. All right, insurance costs is one of the major costs that you're going to face in the industry. It can be pretty expensive for insurance, especially if you're a new carrier in the industry. And especially if you have drivers that are suspect, okay, they don't have questionable driving history, your insurance costs can be way out there, can make or break a company actually, if you weren't familiar with this. And the next thing we're talking about administrative costs, like wages. These are salaries that you would pay maybe to yourself if you're an S corp. Maybe you're paying somebody an office wage. They're not really directly related to you picking up loads. You pay these people regardless. Let's say you have an administrative assistant or somebody in the office doing office work. They're going to come in and they're going to get paid regardless of whether or not there's loads being delivered. Okay, so that's what we call admin wages. The other thing is licenses, permits, and taxes. This also includes like, franchise taxes, Secretary of State filings, anything you need to make sure you're in compliance with your entity and structures. Permits, you guys know if you go into certain jurisdictions, you want to have a permit. Maybe if you're overweight, you might need a permit. If you're oversized, you're going to need a permit. If you're going into New Mexico and you're not set up with them, then you're going to need a permit. All those things are part of these expenses that you would incur. Okay, and they're not necessarily directly correlate to producing the load, although I just mentioned like going into certain jurisdictions, yeah, they do, you have that cost incurred, and this would still be considered underneath the operational expenses. That's what we have here, operational expenses. And then other things like office expenses, technology that you use to run the business. At some degree, you're going to end up paying for office supplies, software, technology to run the business. It's just the way that it is today. All right, so those are some things that we want to consider. Utilities, of course. Sometimes you don't have an office when you get started. You might have a home office and you don't have a whole lot of utilities to pay for. And sometimes you do have a site. And these are considerable costs to consider. All right. Uniforms, of course, we're going to have things that we wear in order to do the job. You can pay for your employees or pay for yourself. If you're a small operation, this is a definite expense you want to consider. Professional fees. All right. So, yeah, we really want to have partners in business to make sure you're set up to win. So this is something that you want to actually budget for, professional fees. This is for your taxes. This is for your accounting. This is for your legal. These are for consultants. Okay. That would be considered professional fees. Of course, advertising, which could also be for your recruiting costs. So if you're hiring and onboarding people, all the costs associated with that. And then we have administrative compliance things. So what the difference between this and wages is that when you hire people, we got to do their screening, the background checks, the MDR, drug testing. You got to do the employer history and everything else that goes along with onboarding a particular driver or an employee, and under US DOT standards and Federal Motor Carrier Safety Administration standards. Okay, and now travel expenses are definitely there for you and I when we're doing trucking. Okay, now this is something that a lot of people don't think about. You can really get a lot of deductions in this area and not overspend taxes if you do this right, because it's not just the travel that you're using for the truck. These are hotels. This is money that you spend to go out and like plane, airfare to get to certain locations, or share rides, taxis, all these things. And more so than that, there's per diem. Right? Anytime that you're away from the home, you are allowed to take some per diem in terms of travel expenses. Okay. And then we have things like miscellaneous services. This could go all down the line with different things that you're going to pay for. It might be road and wash services, like people come out and do towing and road services that way. Different in maintenance services, this could fall underneath this category. All right, as far as operational expenses. And then so many things can come out of this miscellaneous service area in trucking. And pertaining to your business model, you want to make sure you're set up to win when it comes to planning properly and how you're going to manage this cost. Tires. I was thinking about tires. It's popped in my head. I mean, you got 18 wheeler. It's like when a tire goes out, it could be like $500 on the low end or mid end. Sometimes, it'll cost you a lot more than 500 to replace a tire. But what if you blow out more than one? I've had that happen. We've actually had blowouts and multiple tires get taken out on a blowout. Right. So you want to make sure that you have a reasonable budgeted expense for these things, is what I want to say. And we have interest, any type of loans that we have for equipment or whatever else it is, you want to consider the interest expense. And then, of course, bank charges and fee, how much fees and what it costs to maintain your bank account, and overdraft fees. Make sure you don't have any of those. Those are unnecessary charges. But those are a consideration as well. And there's some more things, but these are the main ones that you want to consider when running your trucking company. All right. So hopefully that makes sense. Any questions so far, guys? It's kind of straightforward with what this is. Gotcha. All right. So now comes real conversation. All right. We're going to talk about some things. Now that we got a basic understanding of, an income statement, it's very important, extremely important, to plan and execute. What do I mean? A lot of times we just do things without considering what it is that we're doing or the impacts of what it is that we're doing in business. What am I reasonably making every single month? Like predictably. I know that there's that feeling as an entrepreneur, like, some months are good, some months are bad. There are the ebbs and flows of business. And sometimes it could seem like it would be unpredictable. I invite you to stop thinking that way. Okay. Thinking that way will not have you win big. I invite you to think another way, that you plan for your success through these numbers. We talked about something similar last year rather, and I want to bring that back to the conversation real quick. Let's do a new share. Anybody remember this conversation who was here last year? We looked at this chart. Baxter, I know you were here last year. Whether or not you remember, fuel prices last year, 2022, they were somewhere around right in here, like 550 to 560. And I was saying that right here, like this historical activity and pricing for fuel would be the place where this would return and start bouncing back up. It's not going to really be below $4 a gallon is what I said specifically. That's what I said. Right. And although it's not exact, today, look at this, man. It's right in that range today. And it's hooking back up. Fuel prices starting to hook back up. I want you guys to pay close attention to what's happening with fuel prices, because sometimes, well, a lot of the times really, life is not a mystery. There's like certain patterns of behavior that we can predict. not just with the fuel prices, because I'm in that range of where we talked about. It's not spot on, but it's right around this like $4, $3.80 really. National average is what it dropped down to. And it's now starting to curve back up. This is usually what happens in what we call a zone. This is what we call a support zone. Right? There's an area of fluctuation of pricing where it was trying to break beyond before, and it did not. It had a hard time. And this is back in 2011 and 2012 and 2014, 13 rather, and then it can't try it again 2014, and then it just bounced right back down. And then in 2022, it broke right through here. This is all fuel prices, is what we're talking about. The fuel prices just broke right through with a surge. It's like I'm free. Boom. And that's what happened. All right. This is like a market pattern that we look at. Because it's so much what we call there was so much resistance here. We know that this is like a point where fuel would most likely come back to, and then it would go up again. Okay, so we're at that point where we're at a low for fuel. And we can expect the plan for fuel to rise and what the impact will be for our operations. Now, if fuel goes back up towards $6 a gallon, which is most likely the case, is going to try to come back up to this high point here, which is right around, a little under $6 a gallon, 5.80. Or right around that range. It could hit 6, right, before it starts bouncing back down. Sort of like how this was bouncing around. It might bounce around like that here. And if we think about that right now, that's another, what, 30? Yeah, it's like 30%, 33% increase from where it is today. So if we increase fuel costs 33%, that's 33% less profitability that you're going to have on fuel, like based on the fuel numbers anyway. Okay. So if I know that now, what do I do? What would you do? Right? What would you do if we know this now? What are some ideas for consideration? You can type them in the chat. You can shout it out. Let me know what you think. What would you do, knowing that fuel prices most likely will go back up towards $6? Yeah.
I will put it in my budget.
Yeah, absolutely. Put it in your budget, and good deal. Fuel cards are really good, man. So fuel cards and discounts, yeah, absolutely, 100%. Like, I'm looking at what is going to be the biggest deep discount fuel card I could have that will sustain my operations over the next 2 years, really, is what I'm looking at. It's like next 2-year frame, fuel optimization. Upgrade vehicles was a real great idea, Desmond, because it will save overall. If we get to the point where like this battery technology is sufficient enough to where it's not going to cost a whole lot to replace the parts and everything, that makes a whole lot of sense. And I haven't done the numbers on it as far as the cost and impact versus fuel costs inside of electric vehicles. That's a consideration as well. The other thing is, let's take a look at this. Okay. We looked at this. I built this out last year, the spreadsheet, but the numbers are updated to reflect what's going on today. Okay. So basically, what we're looking at are the fuel. Got somebody coming in, guys. Hold on. Basically, we're looking at like cost of fuel across the country and the regions. We're looking at how much somebody could reasonably get for spot market rates, regionally and across the nation. And then we're looking at what the profitability will look like based on this stuff. Okay. And where is it that I want to spend my energy and focus is the question inside of this. that we want to ask ourselves. Now, quickly looking at this, what would you say is the best combination of things? I'm not going to say it myself, but I want to hear from you. What would you say, looking at this spreadsheet here, if you can read it properly, where would make sense, knowing that fuel costs are going to go up? What would make the most sense for me inside of time, energy, and focus in the trucking industry? Stay local. That is a good option. Stay local. Yeah, depending on where you are too. Now that's not up here. Like the numbers for staying local. And there's so many other options that are not up here as well. And I like the way that you're thinking, Charlene. Right? Because that does cut costs, that does make sure you're increasing profitability by staying local, especially if you find a contract that is consistent and reliable. But looking at what's here, because this is all OTR regional. Yeah, working the Midwest, higher rates. Midwest, yep. That's one great idea right there. Midwest, higher rates. Now, if we look across the board, yeah, Midwest is higher for the most part, no matter what equipment type that you have. It's pretty safe to go Midwest. If I was running a flatbed, then I would consider, yep, Midwest would be the top one there. I would also consider Southeast if I'm doing flatbed. Now, the other thing is, like, I would also consider flatbed because it seems like it's returning the most. Now, there are some considerations with flatbed, like tarping and the time spent there with that part of the business, securing the load and all the other things that eat up time. And if we shift it over there to the reefer side of things, reefer would be a consideration as well. But the thing is that's missing from reefer here are the cost for maintenance for the reefer and fuel. Right, so there is a slight increase in the fuel costs, and there's an increase in maintenance costs. Right, so that might not be as attractive as what it looks. Right now, what I'm getting at right here, inside of looking at these things, I don't know how many of you guys really put together things like this to look at for yourselves. Any of you, like by raise of hands, or if you do this, put a 1. If you don't do this, put a 2 in the chat. If you build out analytics in this way, put a 1. Thanks, Desmond. And if you don't do this, put a 2. Gotcha, Baxter. Thank you, sir. Yeah, it's not really common, right? It's not a common thing that people would do. This is what I would do. This is what I do. I'm looking at things, making sure that the choices that we make not only make sense, but they make dollars. This is the by the books philosophy. Okay, you wanted to make sense, but not just that. You wanted to make dollars. Okay. Now, if I'm just going out here doing things without really counting the costs involved, without seeing reasonably what I'm going to bring in revenue-wise, I'm not setting myself up for wins. Just by doing this, I'm setting myself apart from other people in the industry. Like, it's apparent because like you guys are on this call, you guys are the ones that actually want to know this stuff, and you're not doing it for yourselves. A lot of folks don't do it in the small carrier space. A lot of us will complain instead. That's what'll happen. We'll get the complaints. Man, this economy. I can't believe the fuel cost. I can't believe the freight rates. Can't catch a break, man. What's going on? Okay, we're going to get all that stuff. And there's ownership available by being an owner. Ownership says, well, I take control over my future, the future of my business, the future of my life, the future of my business, the future of my life. That's what ownership says. Okay. And this is ownership. And when we actually take the time to count the costs and we make decisions that make dollars. Okay. And we can continue to build this thing out to really see the details. And now the thing that we don't want to get into, like there could be like an overdoing and a paralysis of analysis with things, but this doesn't really give access to that. This gives access to clarity. Gives access to like, okay, well, this makes a whole lot more sense. When I start looking at the profitability per mile toward the lower part of the page, it makes a whole lot more sense to consider flatbed, because that's where the impact is really seen. That's not a small difference. When we look at $1.40 versus $1.28 per mile, going from flatbed to reefer, and considering the costs associated with reefer, and then we look all the way over there to 92 cents per mile in the best performing area for dry van, then it makes more sense to just make a shift, to choose something new, or at least have the option available to do flatbed work. And we're not even talking about other things like, well, if we put in that, like some type of endorsement, like hazmat, right? Now, if we do things like that, then there's more available, or even getting permitted loads, like heavy haul type loads. Well, now we're actually making even more improved decisions, right? But there are so many choices that become available when we actually put things out here in front of us in reality. A lot of us do things in our head, and we don't really get it out of our head and bring it out here to really see what choices are available. Okay. And this is what the buy the books philosophy brings. It's like gives you choice. All right. This is how I would love for you guys to think. With that philosophy in mind, is to have choice, true choice, rather than being a reaction to life. And the reactive nature to life is I just get up and go. And I don't ever sit down and take time to be precise. I can get up and go. For example, like my day today was go, 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 go. But before today, I actually took the time to be precise. I sat there and thought out what was going on, what activities I would have. So I wouldn't have to have the mental lag. I wouldn't have to think about what I'm doing while I'm doing it. I'll just go ahead and execute on what I'm doing. Next. Now, that's this process here. Right? We sit down for a moment and we actually consider what's happening. And then once we consider what's happening and make the choices and plan out the execution, then we just go ahead and go and execute. That's how we win, like big time. That's how we win big time. Okay. Now, what else was there? There was something else in this conversation. You might want to know, and this is the other thing, you might want to know, well, how do you get this information? How do you know? You guys know like how to get this information? Anybody know how to get this information? How to know like what these numbers are? Let me see if anybody knows. Am I pulling these out the air? No, I'm not pulling them out the air. I guarantee I'm not pulling them out the air. Yeah, so let's take a look. All right. Okay. So there are certain sites we're going to use. Like this is the U.S. diesel price metrics by the Fed Economic Data. Okay. So that's the website. You come here and get the economic data for fuel prices historically. We can see it in graph format. If you don't like seeing it like this and you want to really see, good. You can go to the Department of Labor too, Desmond. That's a really great resource for labor costs. Because a lot of that's another decision. And speaking of that, before you actually move forward, we go back here. Driver cost per mile, 49 cents a mile. It's modest. Like a lot of people would pay, some people I hear, most of the people I'm hearing are paying more than that. Like small carriers, they'll choose to pay their drivers more. I'm seeing that. But if I go to the Department of Labor and Statistics, that's the average. And I know that we want to attract drivers and everything, and make sure we take care of our people. I'm like that too. And there are other ways to take care of them, treat them well, right? But you also want to make sure the company is sustainable at the same time. All right, all of these things they matter. And so if you want to improve over the driver cost, do it within reason. Like it's 49 cents average. Why would I pay 65 cents or 70 cents as a small carrier per mile? Now, some of you don't do it this way. Some of you do it per load and what the pay is, or some of you guys do it per hour. There's different ways to approach this. But when we're thinking about the unit performance, like unit performance tracking, we're actually looking at it per mile here. Okay. And it's all translatable, is what I want to say. Whether you're paying them per hour or per load, it all breaks down to CPM. And when we take a look, well, how much do we actually do here? If I'm doing like long haul, over the road OTR stuff and regional stuff, it's all going to come back down to CPM, right? But a lot of times, what I'll see, I have people that I work with, they pay their drivers like 60 plus cents a mile. And it's like, well, why? Where did you come up with that number? Oh, I just want to take care of my drivers. Okay. Good luck with that. Good luck with that. All right. But it doesn't make sense until we sit down there and think about, well, what's going to be the choice for sustainability and profitability and the intentions of the company overall while taking care of the drivers. All right. That all has to be taken into consideration. All right. So that was a good comment there, Desmond, the Department of Labor and Statistics. That's a good resource. Okay. So yeah, that's one. Then we have the U.S. Energy Information Administration. All right. This is, if you didn't want to see the graph for fuel, you can come here and look at it. All right. So you got gas and diesel. All right. So this was a bend up today. All right, from what it was. Now it's interesting because this was really the low, and this was a turn up. This is a new high. That is interesting to me. It's like right around what we were talking about last year. Okay. The other thing that we have here, that freight and analytics. That freight and analytics. So you can come here and look at what the average is across the board for the spot market rates for the equipment type that you're using. And then we can look at industry trends here too. I like looking at trends. One moment in time is not good enough. We need to look at what the actual trend is over time. Yeah. So these are actually down overall almost 10%. Down 54% over the year. Okay. Now, the thing that's not here, we can look at this. Yeah, so I mean, we got a demand turnaround here. All right, so there's a lot of information that we can look at inside of this one particular site, that freight and analytics. It gives you really good insight into what's happening across the board over time, whether it's this week versus last week, which is not a good indicator of like a long term like trend, um, but it still gives access to like where things have been headed over like recently. Right, if we keep eyes on it week after week, we can look at that pattern and say, okay, man, this is consistently going this way. What is the decision I'm going to make based on that? Right. So great places to come, guys, for information to see what's happening market wise inside of the industry, like to make your choices. The other part of this conversation that we're going to get into a little bit tonight is budgeting. Okay. Um, how many of you have actually created a budget for your trucking company? Anybody here? If you have, put a one in the chat. If not, put a two. Okay, good. Yeah. Yeah. So there are some things like we talk about life. We have a saying in our performance community: life is not a mystery, and life is not a mystery. There are things and actions, or choices and actions that we have that really set us up for wins, and a lot of times we just don't choose. Um, Two things with that: my ability to choose comes down to mainly integrity. That's number one. That's the base of integrity. Am I going to do what I say? If I say what I do, I have integrity. If I do what I say, I have integrity. If I do what I say, I have integrity. If I don't do what I say, I do not. This is power, right? It's like the true access to power for you and me. That's one. That's the main thing, is integrity. Number two is mindsets. An out of aligned mindset will cause us not to make the choices that go in line with an intended result. So what does an out of aligned mindset look like? Out of alignment mindset. I got up this morning. I get up most mornings at 4:30 and go to the gym. I was never a morning person. Right, and never a morning person. I would hate getting up in the morning, period, man. I would hate it. My wife now, she like years ago, and when she would tell me, you should go to the gym in the morning and get it out the way. I would go to the gym in the evening, like at nighttime when things are done. That's my pattern of my whole life. Right. And when she said, you need to go to the gym in the morning, I was like, nah, that ain't gonna be me. I hate going to the gym. I hate getting up in the morning. That's not gonna be me, right? And then I realized there's something I want, um, not just for my health and everything, but there's something I want as far as life output. And I realized that a lot of people, they have this particular pattern to get up and get to the gym by 5 a.m. It's just like a common pattern among like the one percenters. So I had to get over this mindset about I am not a morning person. So much so, like this is like more. It's about a year now, almost a year. Like it'll be a year in September that I've been getting up at 4:30 in the morning and going to the gym. I could say that I'm a new human being just because I shifted mindset. Now, the things that I actually wanted to create out of that have been created, like financially and personal life, health wise, like the things that I actually wanted to move forward. They have been moving forward in the way that I wanted to move forward because I made that choice. All because I got out of my own way. I realized I had a limiting mindset called I'm not a morning person. And this is what a lot of us do when it comes to doing the things that really make the difference. Now, I'm bringing it back to budgeting because nobody budgets, right? But it's a thing that is common among everyone who has financial success. It's like there's a budget, like in a business. If a business is running properly, if even a household is run properly, there's a budget in place, and it's adhered to and it's monitored, and there's the measurements that actual versus budget, and then we can make choices from there to actually improve how we're doing. But why don't people do it? Well, if there's an integrity issue, that's not necessarily a bad thing. It's only bad if we're resisting the fact that you don't have integrity. Because what I resist persists. If I was like, you don't tell me I ain't got no integrity. And that's what people do. You tell me you ain't got no integrity, man. Right. And then we resist it, and then there's no integrity. Right. But the moment that you and I can get, okay, yeah, I have had no integrity in life. Well, now I can put integrity in. It was just a gap. Now I can fill the gap. It's not necessarily a bad thing. Okay. And then we can start doing budgets or create a structure for budgeting. One of those things. And if it's the other thing, we need to go to work there. That's another story. We can actually go to work to remove the limiting mindset. Just like I had to get access to, like, okay, I'm not a morning person. I've been living my life as if I'm not a morning person. Yeah, I got that. That's been getting in the way of this. This is the impact of me choosing that decision. I can see it, and that's not really the life outcome I want. So I'm going to choose something new called abundance of health and wealth. That's what I'll choose. I'll be that instead. Now I can make the choice to get up every day and go to the gym. Now I can make the choice to do my budget and measure it versus actual. All right. These are the things that don't make the difference. We're going to start wrapping up this conversation, and we're not going to get into like how to do this budget today. I will, however, set up the frame for us to do that next time around. We'll go into some budgeting and get what that looks like. I want to open the floor up right now for any questions that you may have or any comments you may have about tonight's session. Like, what are you really gaining from this conversation today? What are you getting access to newly today that you can take with you once you leave the call? That's what I want to hear. If you want to have one thing that you can take from this call and put into action right now and moving forward, what would that one thing be? Go. You can either come off mic or put it in the chat.
Watching the analytics, the data analytics.
Yeah, there we go. Use the numbers, don't guess. Fantastic. Trends. Yeah, watching trends. Yeah, different mindset on business. Fantastic. These are some things that we can really take on. I like what you said about using the data analytics, because now that just trains your mind to go into the process of looking at what's there before just jumping at things. Yeah, I've always been that guy. Like, I notice I like to charge forward with things myself. That's my nature. And when I was 6, 7 years old, we wouldn't learn how to swim. I grew up in upstate New York, like a little upstate, about an hour outside of the city. And we went up to this place called Bear Mountain in the summertime. My mom took us out there to learn how to swim. My brother and I, my older brother and I. My brother, when we got to the pool, he was dipping his little toe in the water on the edge. All of a sudden, all you heard was splash at the deep end. I'm gonna learn how to swim today. That is my mindset. That has been me from the start, and which is a great thing to have. Like, it's not necessarily a bad trade to have. At the same time, there wants to be like reins on it, like things that I bring in. This is why I have a company like this, to bring the reins in, to make sure that, yeah, I want to go full force. Where's my decision point to go full force in this thing? Okay, because that's my mindset. Go, 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 go. Yeah, get it. Let's go. But when is that choice at the right moment? When do I go? This brings that in, and it can bring it in for any business, to make sure, okay, you have confidence and clarity to move forward with your business, and make sure you have a sure win setup too. Right? There are going to be ups and downs in the economy, guys. That's just a given. Life is going to be life. It's always going to be that way. The question is, how am I going to master it? That's the question. These are the things that help inside of mastery. All right, guys, if we have no more questions, we're going to go ahead and wrap it up tonight. It's been a pleasure being with you. Always leave a comment, chat, and if you need to reach out, you guys have the information on how to reach me. All right. We will be on next week. You're welcome. We'll be on next week. I'm moving, guys. I got married and we're getting a house, so I'm moving soon. And so I'm just thinking about how that's going to pan out the next week, not this week upcoming, but the following week. Okay. But it's been great being with you, and I'll see you next time. We'll be here next Monday. Take care.